Picture this: you wake up one morning, and the first thing you hear is that the price of oil has soared overnight. You might be wondering, what's causing this roller coaster ride in oil prices? Well, in this video, we're about to uncover the forces at play and make some bold predictions about where oil prices are headed. Remember that this is not financial advice, and make sure not to make any financial decisions solely on info from this channel. Where do you believe oil prices are headed at this very moment? We value your insights, so please share your thoughts in the comments below. If you find this content valuable and want to stay updated on our future videos, consider subscribing and giving that like button a high five. Your support greatly contributes to the growth of the channel. The oil price is currently moving upwards, and the question is whether it would continue rising. With the Chinese market recovering and showing a growing appetite for more energy and resources, it comes as no surprise that the oil price is once again on the rise. There are strong indications that oil prices will remain high, with at least Brent oil expected to stay above the $90 price ceiling. Both Brent and crude oil prices have been moving from the $70 level in July toward $100. Russia and Ukraine are currently at war, which has affected and will continue to affect the price of oil, but the way it affects it will change as the conflict develops. For example, Russia might have been interested in raising the oil price in the beginning to reduce the political willingness in the Western Hemisphere to support Ukraine militarily and financially at the start of the war. However, as time passes, they will probably instead shift their focus to increase oil production to sustain the war efforts and mitigate the impacts of sanctions. Sanctions are the most expensive obstacle, as they will put pressure on Russia's industry to make costly investments in order to adapt to alternative approaches. However, sustaining a level above $100 for an extended period is unlikely, if it occurs at all. This is primarily due to fundamental factors, such as deflationary pressures in China and high interest rates in the Western Hemisphere, which have recently gained some control over inflation. High interest rates leave households with little disposable income, and oil-intensive activities like travel are often among the first to be cut from household budgets. With U.S. oil reserves now reduced by roughly half of what they were 3 years ago, it appears unlikely that the U.S. alone has the capacity to single-handedly control the rise of oil prices. The past use of reserves for purposes to exerting artificial pressure on oil prices, primarily for price manipulation rather than responding to a major crisis, raises doubts about their long-term ability to maintain stability. This prompts the question of how they will respond when confronted with an actual internal or external crisis, such as energy infrastructure failures, a war, a climate disaster, a rogue AI, or a large asteroid impact on Earth. In the short term, political factors can exert a significant influence on oil prices. It is conceivable that oil prices could reach levels around $130 to $140 by the year's end if there is a concerted effort within the OPEC Plus alliance to influence prices. With Russia being a significant member of the OPEC Plus alliance, it's essential to note that OPEC Plus has the ability to manipulate oil prices if all member countries, including Russia, agree to do so. However, if Russia decides to increase its oil production significantly and flood the market with oil, it may undermine the unity and political will within the OPEC Plus group. In such a scenario, OPEC Plus members might find it challenging to collectively control oil prices due to Russia's substantial role within the alliance. As we can see here, Russia's oil production volume exhibited a less than 20% difference between its highest and lowest points over the last 5 years. Following a steep decline after the COVID-19 outbreak, it steadily recovered until the onset of the war at the end of the winter in 2022. Subsequently, it experienced a less than 10% decrease but rebounded in the months that followed. The overall observation from this trend is that Russia's oil production showed significant fluctuations during the war but did not experience a dramatic crash or surge. It is likely that the recent minor decline in oil production will rebound, driven by higher energy prices that allow for oil exports above the sanctioned price ceiling. As long as oil prices remain at comfortable levels for OPEC Plus members, Russia can seize the opportunity to steadily increase its oil output without compromising its relations with the Gulf states. Consequently, the market might achieve balance at around $100 a barrel. They might seek to take advantage of high oil prices to fill budget deficits for as long as possible during times of sanctions-related instability or wartime. As oil prices continue their upward trend, commuting habits are undergoing a significant transformation in the present-day landscape. Extensive commuting is gradually giving way to remote work arrangements and a diverse array of alternative transportation methods, including public transport, biking, walking, rollerblading, and electric cars. This shift suggests that excessively high oil prices could pose a threat to the long-term stability of oil markets. Conversely, maintaining stable oil prices within the range of $60 to $70 per barrel may inadvertently slow down the transition to green energy solutions due to reduced economic incentives. It's vital to recognize that these contemporary trends, shaped by both remote work and alternative commuting options, hold the potential to influence not only today's oil prices but also the broader energy landscape in the near future. The future of the oil price is no longer as firmly in the hands of the United States as it was 3 years ago, given their depleted oil reserves. It is now primarily up to the OPEC Plus alliance. However, their influence has also been weakened by Russia's need to boost its oil income and alternative suppliers gradually recovering from the COVID-19 disruption. In this complex landscape, the evolving commuting habits and the ongoing transition to green energy play significant roles. These factors could introduce new dynamics into the oil market, influencing not only today's prices but also the broader energy landscape in the near future. While the price is unlikely to plummet, it is also unlikely to continue rising significantly beyond the $100 mark before the end of the year. The oil market is a dynamic and intricate ecosystem, and staying informed and adaptable is crucial in this ever-evolving landscape. If you found this video helpful and insightful, please consider supporting our channel by giving it a thumbs up and subscribing for more in-depth analysis on the ever-changing world of oil markets. Your support is greatly appreciated.